Well, good afternoon, everybody. My name is Chuck McShane, Senior Vice President of Economic Research at the Charlotte Regional Business Alliance. I'm here today with Regional Economist for North and South Carolina from the Federal Reserve Bank of Richmond, Charlotte branch, Laura Ullrich. We're going to be talking about the unemployment numbers that came out today related to the COVID-19 crisis that's occurring now. Laura, thank you for being with us today.
Yeah, thanks for having me. I appreciate it.
So the numbers have been pretty shocking over the last two weeks in terms of unemployment claims. We saw 125,000 total in the two Carolinas last week, and then another 235,000 this week. This seems unusual for a recession. This seems like it's moving faster than other recessions. Is there anything comparable to this in economic history?
You know, not in recent histories anyway, not in the history where we have the measures that we use now to look at it. This is really different, right? And one of the reasons it's so different is because it's hitting everybody at once. And obviously there's certain parts of the country that have been harder hit than others, but still, I was reading yesterday and, seems like the vast majority of people in the U.S. are now under these stay-at-home orders. And so that's impacting economies all across the country very rapidly. So yeah, these initial unemployment claims numbers are really staggering. I mean, if you look at the weekly numbers that the government puts out, it's rare in recent time. It's been rare for us to get over 225,000 claims in a week, and so to have 6.6 million in 1 week is really pretty staggering.
Do we have any sense of obviously it's not hitting everyone the same way. Do we have any sense of who these folks are that are applying?
Yeah, we do. Some states are releasing more data than other states. It's up to the states how if they want to share industry data and things like that. So we don't have great data in general for the Carolinas to look at, but we can tell from the data that we do have, and from just thinking about how this crisis is hitting, that there are certain industries that are hit much harder than others. So if you think about the progression, at first we were told, okay, we need to socially distance, right? And so the first industries that were hit the hardest were certainly accommodations and food service. So last week's numbers, last week we saw over 3 million initial claims, and I think many of those were in the accommodation, so hotels, restaurants, bars, tourist attractions, you think about Disney closing, things like that. This week, I think it's broadened a bit. It's gone into other sectors as well. Interestingly, North Carolina, the states can put comments at the end of their reports, and I'm going to look over and read this real quick, but North Carolina's comments on theirs was layoffs in the healthcare and social assistance and administrative support, waste management, and remediation service industries. So that indicates obviously that it's moved into kind of the administrative sphere, and then also healthcare as well. We're also hearing about, specifically in South Carolina, a good many of manufacturing plants closing due to the automotive manufacturing being stopped for a couple of weeks.
Healthcare, that seems like a surprising industry for this, considering that the healthcare is going to have to ramp up to support this crisis. What's going on there?
Yeah, so obviously hospitals are not laying off nurses and doctors right now, right? So there's parts of healthcare that have gotten exponentially busier, but healthcare is a really broad sector, right? So there's other parts that are not working like they normally do. So, I got an email a couple weeks ago from my dermatologist saying they would be shut down until further notice. If you think about doctors like plastic surgeons who do, almost entirely things that could be put off for a while, right? So those offices are closed down for the most part. So it's that. Also, dentist offices, the ADA has told dentists that they really shouldn't be doing anything other than emergency procedures right now. So dental offices are, for the most part, shut down. So even though there's parts of the healthcare industry that are busier than ever, and certainly more stressed than they normally are, there's other parts of the industry that are suffering. And we have been told by some of our contacts within the healthcare industry that they are laying people off, but that it's generally people who are very far from the bed. So not generally nurses, doctors, CNAs, things like that, but I think it would be more like administrative staff and those types of jobs.
That seems to be across the board on industries really focusing on the most essential areas. We saw that, seeing that in transportation and warehousing as well. where the focus is on just the essential goods. You see a lot of growth in terms of Amazon grocery stores as well, but anything non-essential is really not being shipped at this point.
Right.
What does that mean for the Charlotte region in particular, and our mix of industries? How are we playing into this and being affected by this?
Yeah, so if you think about Charlotte proper, Charlotte is a city that's known for banking, right? And in general, banks are busy right now. Interest rates are really low, so you do have people who are refinancing their mortgages or people who are taking out loans to do home projects and things maybe that they've been putting off. You also have businesses who are trying to expand their credit lines of credit just in case they need it going forward. And then, of course, with the very large SBA lending program that's going to be done through the CARES Act. That will be administered by banks, at least on the front lines. So they're also busy on that front. So I think, the kind of core business that Charlotte's known for remains strong. But of course, we also have a lot of accommodation and food service in Charlotte. You think about all the sports teams that aren't operating and all the different events. I mean, right now, we've all been looking forward to the RNC being in Charlotte later this summer because that will draw huge amounts of people to town. But will that now happen? Who knows, right? So Charlotte proper has some industries that are going to remain strong and some that are really going to get hurt. If you go further out, then you're getting more into manufacturing, right? And some of the other retail and some of those sectors. Retail, brick and mortar retail has been rocked by this. And I do think there's a lot of, it depends on what type of brick and mortar you're talking about, right? Walmart is still busy. Lowe's is still busy. But obviously like smaller stores, retail storefronts have had to close. So I also think in some of these numbers, or actually a lot of the workers in these numbers are people in the retail sector. And then in the Carolinas, specifically more on the South Carolina side than North Carolina, but a lot of the manufacturing, about 30-ish% of manufacturing in South Carolina is tied to the automotive industry. And right now, every automotive plant in the United States is shut down. So this is like the first week since cars were first made in the United States, I think, where we're not producing a single car in the United States. So if you think about, obviously that hits BMW directly and that hits Volvo in Charleston directly, but there's also tons of other people who are making parts of cars, right? And so it's impacting a broad array of companies.
Yeah, we have I believe around 17,000 people employed in auto manufacture, ancillary auto industries in the Charlotte region, and those are high output jobs that really support a lot of other jobs in the economy. So that's a crucial loss for now.
And in general, those are relatively high paying jobs too.
Right.
That's the other thing that I think is important to think about is, you're talking about, and for some of these people, they are going to qualify for unemployment insurance, obviously, but for some of them, even the stimulus that was passed, they're not going to qualify for those checks. And so they may not qualify for the full range of benefits that some other workers might because they are relatively high paying jobs.
Speaking of the CARES Act and unemployment insurance, that act has extended unemployment to a number of workers that typically wouldn't qualify. Can you talk a little bit about that?
Yeah, so it made kind of three big changes to unemployment insurance for right now. The first is it did extend it to people who might not qualify typically. So this is people who are self-employed, people who are work contract jobs. So they might be on a IT contract to do work for Wells Fargo, but they don't actually work for Wells Fargo, right? And then also people that are like gig economy workers. In addition, people who've only worked at their job for a short period of time are now going to qualify. So it broadens that standard quite a bit. So that's one of the reasons why I felt, as an economist, I felt like going in today, this number was going to be much higher this week than it was last week. First of all, because what we talked about is impacting more industries now, but then also beyond that, you've got all these people who a week ago thought they weren't going to qualify for unemployment, and now they do, right? So they're going to apply now. The other big change that it makes is that workers, so unemployment insurance nationally replaces about 40% of income on average. But in addition to that amount that the states award you for unemployment insurance, you will also now get an additional $600 a week. That's funded by the federal government. So people will get an additional $600 a week until July.
Is the goal there to bolster consumer spending as part of the large part of the U.S. economy?
Yeah, so we have these, we call them in my economic textbooks, I've always taught them, they're called automatic stabilizers, right? So we have these programs, most of which were put into place during or after the Great Depression, when we did have people, unemployment rates were 25% and we're having to have bread lines for people to get food because people had no way to get income. And so after that, the government said, we need to have some programs where if people become unemployed, if things get really bad, we have a system where they can get some help, right? So we have things like SNAP benefits or food stamps, as people typically call it. We have things like unemployment insurance where people can qualify for that. So the good news is that those programs exist. So these people that are being laid off, there is a way for them to get money. And the goal for that is consumption smoothing. So if you think about consumption is about 70%, a little less than 70% of GDP. And so when you're looking at a recession, which would typically be about 2 quarters or so of negative GDP growth, consumption is going to drive much of that, right? Because it's almost 70% of the pie. So the goal is to keep it where people can still care for themselves and their families, not have to, be foreclosed on their house or not pay their rent or whatever might happen if they didn't have some income, and they can spend as much as possible. Obviously not what they have before in most cases, but they still have some money to spend.
So looking forward on this, obviously this is happening a lot faster than other recessions, but it may not be as structurally based as other recessions. So some of the positive side of this is we may come out of it more quickly. At least some are predicting. Where do you see this ending in terms of unemployment rates? Are we going to see accelerating numbers?
I think for a while these numbers are going to go up. I expect that we'll have another large number come out next week for initial claims. I hope that after that we start seeing the numbers come down a little bit, but honestly, I don't know because it just depends on the path of the virus. So if we can social distance and slow this thing down and it remains the way it is now in most of the country, then I think we'll see those numbers they'll still be higher than normal, but they'll start to come down some. If it's like it is in New York City and other parts of the country, it could get worse, right? So a lot of it has to do with what happens with the virus. And of course, as an economist, I just can't estimate that. So it is very different than what we've seen before. I think another thing that's really different this time is that this isn't anybody's fault really, right? Like it's not in a lot of other downturns, it's because there were things that happened in the economy, like you said, that were structural issues that were caused by something not working the way it was supposed to work, right? And you might find fault with certain groups. So you might say, well, it's the fault of the banking system, or it's the fault of people who borrowed too much money, or it's the fault of these mortgage companies who gave mortgages to people who couldn't afford it. In this case, there's nowhere really to place blame, right? This is so unprecedented and we're all being impacted by it. So it is much steeper and sharper than normal, but also you could see if we get back to normal business or something that looks like normal relatively soon, then you could anticipate, a relatively strong bounce back. I think the longer all of these stay-at-home orders and quarantines last, the lower the probability of it rebounding as fast. But at the same time, we have to do that, I think, to be able to get out of this. So it's really, I think there will be a lot of pent-up demand once we emerge from this. People are going to want to get out and spend money, and but at the same time, it's hard right now to imagine. My 10-year-old last night said, "For my birthday, I want to go on a cruise," and I thought, "Oh, I don't think we're going to be doing that." So how long will it take for me to look at him and say, "That's a great idea"?
Right.
Is that 2 months from now? Is that 6 months from now? Is that 2 years from now? I just think it's impossible for any of us to know.
So time will tell.
Mm-hmm.
Well, is there anything else you wanted to mention about these numbers? I know that there's another jobs report coming out tomorrow, and this may, for people who aren't in the economic world, this may be a little confusing because that may not capture all of this, all of the new claims that are in there. Can you talk a little bit about how what should a non-economist be paying attention to when it comes to data?
Yeah, good question. Okay, so there's a difference between the payroll number that's released, so that's the number of jobs that have been created. That number also is not going to be near as strong as what we've been seeing, of course. But there's a delay in all that data. Actually, this initial unemployment insurance claims is really some of the very first data we get. So it's telling us more, I think, about what's actually happening right now than some of these monthly numbers are going to tell us for a little while, because the virus impacted different places at different times. So that number that comes out with the payroll number is just going to tell you the total number of jobs that were created, but that number is a little harder to decipher than these unemployment insurance claims numbers.
So we'll just have to keep analyzing and keep pushing that information out there. I know the Federal Reserve does great work on that, and we're happy to have you as a partner.
Yeah.
And appreciate your time today.
Yeah, absolutely. We're happy to have you guys as a partner too, and we're certainly out there talking to as many people as we can about what's going on, because, like I just said, some of this data isn't going to tell us a lot for a little while. So we are trying to collect as much anecdotal data and just as much information as we can. So, for anybody who's watching this, if just know the Federal Reserve is busy doing a lot of research on what's going on in the economy in both North and South Carolina and the rest of the country.
And keep checking back with the Alliance as we try to bring you as much information that helps your business as possible. Laura
Absolutely.
Ullrich, thank you so much. Stay well.
Thanks.